everybody. Welcome to another show of 10,000 Roads to Financial Independence. Today, I have our Angel Williams. And Angel is a serial entrepreneur, and she's the owner and co host of The Academy Presents. Angel is a former school teacher turned real estate investor. She's also a generational wealth consultant and podcast host. Angel and her husband created The Academy Presents, an online learning platform for people wanting to know more about building wealth through real estate investing. Andrew and her husband have reached FI through generating infinite returns out of their single family homes, basically multiple holdings that they have, and generating infinite return, pretty good. Their oil and gas investments and investment into multifamily, a lot of stuff going on. And welcome to the show, Angel.
Hi, how are you?
It's so great to have you over here because when Angel talked to me briefly about their business, and then it turns out she has a podcast that's going on, education, and then there's also underwriting services. So just lots of ideas and actually taking them to fruition. So I'm really excited to kind of dive into this show to kind of talk about how she actually keeps all of these together. So Andrew, like when we start our show, we usually ask our guests one question is, tell us an incident or influence that you had in your past life that is shaping the entrepreneur who you are today.
So I grew up in a family that invested in real estate. My grandparents raised me and they got into real estate in late 70s, early 80s. So they had some, I think it was like a little quadplex apartment. So 4 apartments there. They had a couple of single family homes. They had a small mobile home community. And so I grew up that was the norm.
Yeah.
That's just what you do. And so real estate investing was something that was just a very normal progression for me. And then my husband comes from a similar background. His family invests in real estate and at a much higher level than my family did.
Yeah.
So it was just a natural progression for us to become real estate investors. And I mean, what is it? 90% of the world's millionaires are real estate investors.
Yeah, I was thinking it's even higher. Yes, definitely. So, but you are a formal school teacher. So how, right around the way, like how did you become a school teacher and how did you transition from a school teacher to a real estate investor? It seems to
So
be a not very common path to take.
it's actually kind of funny. So I graduated in 2000 with a BBA with a major in economics, minor in music. There weren't a whole lot of jobs. So I'm like, hey, I'll just get my master's. So in 2002, I had my master's in econ. And again, there just weren't a whole lot of jobs. And at that point, I moved to Lubbock, where Jason was. Jason was working on his doctorate in chemical engineering. And my first job in Lubbock was at Sutherland's lumber store.
Mm-hmm.
And I worked their lumber counter as a cashier.
Yeah.
With a master's degree, making like, I don't even know, $8 an hour, I think.
Yeah. Wow.
It was crazy. And it was actually the only place that I did not put down that I had a master's degree or a bachelor's degree on the application. Mm-hmm. So I know that you're not supposed to do that, but I was like every other place and so in desperation, I did not put it down and I got an interview. So despite the potential backlash on that, when I did the interview, I told the manager, I was like, so I actually do have a degree, because I needed to tell him because it says, you're supposed to. But anyway, I still started off at the same pay as everybody else. And honestly, working the lumber counter, I learned quite a bit about construction. Awesome. So that was kind of neat. And then trying to find something a little more stable that wasn't an hourly job, I found a private school that needed school teachers. Mm-hmm. And so I did that. 2004, I made $15,000 a year.
Wow.
I brought home $1,001 a month from that job. So I worked that job Monday through Friday, and then I worked Friday evening, Saturday, and Sunday at Sutherland's. And that was what I did while Jason was finishing up his doctorate. After that first year in 2003, 2004, I went to public school. It doubled my income.
Yeah, wow.
And I taught K-5 music, and it was awesome. Jason finished up his degree in 2006, and we moved to where we are now. And I subbed a little bit. We were pregnant with our first child at that time. So I subbed a little bit here and there. I did some tutoring. I just kind of floated around the K-12 environment. And then I went back to full-time teaching in, I don't know, maybe 18, teaching middle school. Yeah. And honestly, it was a really toxic working environment.
Mm-hmm.
And we had replaced my income years before I took that job teaching full time, because I just love to teach.
Mm-hmm.
And it wasn't about the money and it wasn't about anything else. I love knowing that I'm helping people.
Mm-hmm.
And so when it became toxic, I had the flexibility to leave that environment. And I went out on FMLA because I did want to go back, but there wasn't a single doctor or anybody else in town that was going to release me to go back.
Mm-hmm.
So that was the pivotal moment that made me a full-time real estate investor.
Nice, nice. It's a quite a bit journey from that in terms of a transition and all that. But I think I've heard tenacity, hardworking in terms of making up to that, supporting a husband who's going through school, probably not making too much income, and that's amazing. I think there's always hardship, stories that we kind of uncover during these podcasts, which kind of really shapes who you are today. So tell us a little bit more about once you kind of quit your job. Actually, tell us a little bit more about your investment, because I can imagine that we have a lot of listener who's maybe making 200, 300K a year combined incomes, and yet looking at, well, how do you even have capital to start investing? So I'm gonna kind of position that question to you, who's making possibly only $15,000 a year at the time, and how did you kind of even think about investing? Because oftentimes people in that shoes, they just try to make ends meet.
No,
That
absolutely.
mindset that makes a huge difference on
Yeah.
becoming.
So we kind of got in at a good time because we bought our first house in '03. And at that point in time, you could still, with the right bank, you could still do 100% finance,
Mhm.
or pretty darn close to it.
Wow.
So we did the 80% on the house, and then we got a second loan.
Hmm.
And so we were able to buy that first house, and we lived in it while Jason was finishing up his degree. But both of us knew, without even discussing it, that that would be our first rental. And so when we moved to where we are now, I guess we moved here in '07, we did the make ready, and that became our first rental.
Wow.
So in ways it was a little bit easier because we were able to finance so much of it. But for someone that's, and I get it. I know it sounds crazy, and people are like, you make how much a year and you're still living paycheck to paycheck? But I get it.
Yeah.
And how hard is it to put aside, 10, 15, 20, 25,000 to get into, a 506B or something? I'm not going to say it's easy, because it's not.
Hmm.
And it's not just giving up your latte habit, and it's not just giving up your, going out to eat habit.
Hmm.
It's so when I hear people say, oh, that's how you can get out of debt, dude, three
Yeah.
or $4,000 a year isn't putting you in debt. Sorry.
Yeah. Yes.
But I would just say, just decide on an amount that you're going to stack aside and just make it happen.
Hmm.
It's not pleasant,
Yeah.
but just for an example, like right now, I am doing my best because I need to pay off my uncle on a plot of land that he and I own together, because I want to build on it.
Hmm.
So I need to pay him so that I can build on it. And it doesn't sound like that much. It's like, say, $10,000. But knowing that, okay, I need to save up $10,000, I have an amount that I'm working toward. And so I can just stack away for that. And
Yeah.
that's not a rainy day fund. It's not something that you can dip into if you've got a little bit of hardship and, you need to go out for a vacation or something like that. You put it aside and you forget that it's there.
Hmm.
And so when you're trying to save up to get into your first investment, that's what I recommend doing. Just stack it away and just play like it's not there.
Yeah.
And then you've got your credit cards for emergency, or you can try to go to the bank to get a loan for an emergency, but that's not an emergency fund.
Hmm.
That is the money that's going to get you out of your W-2.
Yeah.
So
Yeah.
put it aside and forget that it's there.
Yeah. And then deciding kind of from the motivation, right? And I think that's really the key. It's a motivation. It's a goal that you set up. You probably do an exercise, envisioning this kind of every day and making sure that you're kind of on tracking all that as well. That's awesome. And so tell me a little bit more about your first investment into single family home, and now looking back, would you recommend other folks kind of do the same?
So having single family homes and knowing that we've cash out refied all of our original money, they are infinite returns. Now, does that mean at the first of the month we're holding a wad of cash? No. What it does mean is that we're building equity in those homes, and someone else is paying our mortgage. So you're basically kind of getting free equity. And at some point you are able to do another cash out refi, or maybe you can find a bank, maybe you have a commercial loan officer that can help you do a line of credit based on your investments, which I didn't even know that was a thing. I thought you could only HELOC your home. Turns out you can get lines of credit on your investment properties as well.
Yeah.
So, you can build up your equity, and you can look at those investment lines of credit, which will help you roll into something else. So you can, pull your investment and roll that into something else. It's probably going to be tough to do right now, just with the state of the economy. A lot of banks are being more cautious with what they consider to be riskier investments. So you might have to watch out on that, but there's some neat things about working in single family, because generally you don't have to have a partner. You'll get to a point where you walk into a house and you just get a feel for it. My comfort level is single family homes all day long. That is what I like. My husband is all over multifamily, and so we're going multifamily. It's more scalable. You can move bigger, you can get bigger faster. I mean, it's a lot of great things happen with multifamily, but it doesn't take away my comfort level. And it doesn't, when things get rough, I'm going to retreat back to single family homes, because that's what I know. And I'll get there with multifamily, but right now it's over there in single family, or even residential multi. And the thing about dealing in a smaller property is it is a super slow roll. Now I've heard of people buying multiple houses a year.
Yeah.
We were never there. We were good if we were buying one every couple of years. The last, we did buy a portfolio on the last set, but total cost was about the cost of a single family home here, a nicer one. We were able to pick up two basically class C's at about 110.
Nice.
And we were able to put them in a commercial loan, which is a whole different beast from a residential loan.
Yeah.
It was wild. Like, instead of filling out this much paperwork, it was like this much paperwork.
Yes. And on commercial side, how did you buy a whole portfolio? How did you come about the portfolio single family? Because I love that you just touched on, like, people always say, like, not scalable. You could scale. In fact, I went to a multifamily conference last week, and folks were talking about buying like 80,000 homes.
So I've come across portfolios of 50 to 75 houses. And because they are usually divisions, so they're on the same street or really close, sometimes you can get a non-recourse on those.
Nice.
I think it depends on the relationship you have with the loan broker as to whether or not they'll help you finagle it. Because they're supposed to be they're supposed to be on the same street next door to each other. But if you've got the right kind of relationship, you might be able to do like back to back or in the same block. So there's lots of options. So the portfolio we looked at, we were at an REI meeting, and a lady showed up, a realtor showed up, and she was selling 6 houses. So we went up to her afterwards and we were like, hey, are those all the same owner? Well, they were all the same owner. So we were like, well, we'd like to buy all 6. And they were going on the market on Monday. And we were like, can you give us today to drive by them and put together an offer before you list them?
Right.
And she was like, okay. And so we just drove around and looked at them, and we made an offer, and they didn't like the offer. So they started selling houses out from under. And it was down to 2. And we were like, holy crap, we want the houses. Let us buy the houses.
Yeah.
And finally we had agreed on a price at 5. And then the owner said, you know what, I can't sell them for that price because that's what I paid for them.
Yeah.
And so I was like, okay. And so then 3 more were sold, and we were like, just let us buy what's left.
Yeah.
And so one was tenanted, one was not. So we inherited a tenant, and a lot of people will tell you that's horrible. It's not that bad.
Right.
Because I mean, then you're only having to look for 1 tenant instead of 2.
Yeah.
So that was a benefit. And this is the first time in a really long time that we've had every single one of our single family homes rented.
Nice. So you're not having to filling them and all that. So you mentioned before, not perhaps not all these single families are local. So are they all local? So how do you actually, invest out of state? Because again, in the multifamily world, people always tell you that you need to have X number of units on a certain site. Scalability really helps you to get more control. So how do you even get a single family to kind of really scale if you're buying one here, buying one there?
Yeah.
So
So
how did you get that? You know.
yeah. So our homes are actually all in Texas. Texas is really big though.
Mhm,
So we have a home in Lubbock, which is about, I don't know, 3 hours from where we are.
mhm,
And our thing was that I watched my grandparents shuffle from property to property at the first of every month and collect rents.
mhm,
And after my grandmother passed away, my grandfather kept doing that
mhm.
until he was like older. Like he was coming in on, goodness, grandpa was coming in on 80 and was still
Was he
collecting
driving
rent.
a Buick? Was he driving a Buick and like going down the street and go like, "Hey, rent," drop it in the back?
But I mean, I watched them continue to self-manage well beyond when they should have. And
Mhm,
so I found him a property manager, but we had already had one.
mhm.
But watching my grandparents do all that extra work for
Yeah,
10%
yeah,
was ridiculous to me.
yeah.
And then my husband's family was like, oh no, get a property manager from day one. And so we always knew we were going to have a property manager.
Mhm.
And so our house in Lubbock has been with a property manager now for 14 years.
Wow.
Yeah, it's two different managers. The first one lasted about a year
Mhm.
ish
Yeah,
with a bad experience. And then we moved to another guy and he's had it the rest of the time.
nice.
And the cool thing about that too is that we are now looking at picking up more portfolio properties in Lubbock.
Mhm,
And we've already talked to him about taking on the management of those properties.
mhm.
And he said that they would be able to do multifamily and they would be able to do like large portfolio purchases of duplex or residential multifamily as well. So we already have that set. He's
Mhm,
willing to do the market analysis, everything. So that's what's kind of cool about having those relationships started.
mhm,
So we have that house there, and then we have the four houses where we are now. And again, even though we're here with them,
mhm.
we still use a property manager because
Yeah,
it makes life easier.
right.
And it's
Absolutely.
only 10%.
It's only 10% of the revenue of the income as well.
Yeah,
It's
and
not,
that's only when it's rented. Yeah.
yeah, or anything. And so tell me a little bit more about how did you then decided to start doing oil and gas investment, which is not very common. Um, you know,
So
very safe, next door investment of single family to oil and gas, which seems to be very volatile and risky. Yeah.
um, so that one was kind of it just kind of happened. So my husband's dad, and I have so much respect for his father. But my father-in-law, his degree was in biology and then mammalogy, and then his doctorate was in museum preservation.
Wow.
And he got his doctorate came from a Scandinavian country. I'm really geographically challenged, but one of those S countries. And his dad was the foremost expert of some subject areas in the U.S. So he actually taught some of his own PhD courses.
Wow.
Yeah, it was crazy. But he was also very well versed in stocks and real estate and all of those other things that people go to school for. Like
Hmm.
I have the BBA
Hmm.
and I couldn't even hold a candle to the amount of knowledge that he knew. And he was self-taught so much of it.
Yeah.
And so it was just wild. But one of the things he told Jason was that when you diversify, you always want to go and you're going to eventually want to go into oil and gas.
Hmm.
And so we were at an event and it was, and is it Brian Ellis? I can see the spelling in my head. I don't want to pronounce it wrong, but Brian Ellis is how I would pronounce it. And I saw him at an event and I was like, holy night, this guy is pretty awesome.
Hmm.
And he was talking about oil and gas.
Hmm.
And so then he spoke at my summit, I guess not this last summit, but the summit before, or
Hmm.
it might have been the last one. I think it was the one before. And he pitched an oil and gas deal.
Hmm.
And we were like, that sounds kind of interesting.
Yeah.
And so we listened to the webinar on it and we didn't buy into it.
Hmm.
So then a second chance came around.
Hmm.
And the first chance that we missed out on, we really missed out on. It did very, very well. And so when this one came around, we were like, let's just do it, because worst case scenario, we pay in and it dry holes. With that particular deal, it was 100% write-off year one.
Nice.
So say it dry holes. Okay, so we don't have to figure out how we're going to depreciate away any cash flow from it. And we get to deduct it all in that first year. So yeah, it's a loss, but we just chalk it up.
Yeah.
We don't pay taxes on it. I mean, it would suck. It would not be fun.
Yeah.
But let's look at if the worst case scenario happens, what are the benefits of the worst case scenario?
When you have deductions from oil and gas, and that is 100% offsettable from your income tax, correct? Like even if you have a W-2, I understand that correctly.
I don't know all the ins and outs. That's why we have an amazing CPA. But it's basically it would just be a wash.
Yeah.
It would just wash out.
Yeah.
So before we would have paid taxes on, just say it's 100,000. You would have paid taxes on the 100,000. Well, if you put 100,000 into this particular investment and it dry holes, you write off the 100. So it's a wash.
Yeah, that's correct. Yeah, because I believe oil and gas, easementship, there's a couple other, maybe the opportunity zone, which is phasing out anyways. These are like the only, as far as I know, 3 vehicles that is off-writable for W-2 job income. Whereas multifamily, you can off-write taxes, but really beneficial to folks who actually are real estate professionals and working actively on their projects. So I want to kind of just highlight that particular, like oil and gas, that there's some nuances in that. That's actually great, because when you're looking at an investment, it's like at the net take home is what you're really looking at. So if you were having something that you could offset your taxes with, so worst case scenario, as you were saying, is that you actually save some taxes, which is not too bad. That's if you have, active surplus.
Yeah, because like now we're having to figure out how we're going to offset the cash flow.
Yeah, which is great.
Yeah, well, and the sad part of that is, I mean, one of the reasons why people move into multifamily and syndications is because you run out of money.
Right.
You can invest a ton and then you eventually run out of money.
Right.
And multifamily is amazing. And the overall return is crazy awesome. With all those, double up possibilities and potentials, but it's a longer term hold. It's not long term, but you're basically not going to see your money for 3 to 5 years.
Right. Exactly.
And you kind of
7 years, what we usually tell our investors.
Yes. 3, 5, maybe 7, depending on where the economy's at. But it's, you have to come to terms with the fact that you're investing possibly everything you have liquid. And you're not going to be seeing a whole lot of that coming back in. So you still have to make sure that you have like survivability money, what you're going to survive on. And I'm not even going to lie. Right now with the economy the way it is, we have pretty much zero liquidity, because having cash scares me right now. Because watching what's going on, our dollar is already a fiat currency, which means our dollar is only worth $1 because we think it's worth $1.
Yeah.
Well, I think enough people are coming to the realization that by printing all of this money and by sending all this money out, there's no way that dollar can really be worth $1 anymore. And so our dollar is rapidly losing value.
Yeah.
And so that's why I don't want to hold a bunch of dollars. I want to see all of our money in assets, but that also means that we're buying our groceries on credit cards.
Yeah.
So, I mean, it's a trade-off.
Extreme cash management here. Yes. That's amazing. I love, like, you're using all these financial tools to optimizing and, essentially hedging against a certain market indication that's coming. Not coming. It's already, here.
Well, and I mean, honestly, we really lucked out on the oil and gas too, because they finished drilling in December. We just barely got in.
Yeah.
But I think too that one of the other ways that we're going to see inflation hit is that it's going to be harder to force appreciate in multifamily. And you can only cut expenses so much.
Right.
And so I think we're going to see a situation where it won't matter what kind of upgrades you do. People won't be able to afford any level of upgrade
Yeah.
because inflation is going to make their dollar worth so little.
Yeah. Yeah. Or it could be the other way too, where rents, etc., continue flow as inflation is flowing because you got to have the place to live, and
Yeah.
that comes down to the essentials. But that these are kind of like a really good thoughts. And so tell me a little bit more about now you kind of get into multifamily syndication or multifamily investing, and so what kind of criteria you're looking for, in these markets, multifamily, passive or active investing?
So for passive, the location doesn't matter as much.
Hmm.
Um, we want to make sure that we have a good relationship with the operating team and that we feel good about the investment. We've had a flub up. I mean, things happen.
Yeah.
And you can't trust yourself to be correct 100% of the time. And I've had to quit being so hard on myself because I trust my gut. I trust my intuition a lot. And that guides a lot of my decision making.
Yeah.
And so I've had to back off on myself and be like, you can't read everybody 100% right 100% of the time.
Yeah.
And so just coming to terms with that for me. But the other thing that we kind of lucked into one or two, just because we thought the team was okay, and they're younger, but they turned out to be amazing. So it's AD&D out of DFW. They're a great group of guys, and their stuff has been really successful. And then we've had a couple of others that have been really good. So got a couple in Houston, one and a couple in DFW. So everything's in Texas because Texas is kind of hot, and I like Texas. I live here. I've lived here my whole life. Right. And I feel safe in Texas. We looked at some in Oklahoma City as well. Yeah. And we're actually working some stuff in Lawton, which is also Oklahoma. It's not too far from where we are. So Oklahoma, we're kind of venturing into it. We'll see how it goes.
Yeah, very different markets than Dallas and Houston, potentially. That's awesome. And so why did you decide to go multifamily? Like, I'm kind of shocked that you're not an oil and gas operator on the wheel. Yeah.
It was the double up that pulled me in. Or I should say the potential double up. And so this is kind of showing off my naivety on stuff. But when we first started looking at passive investing, it was the only thing I cared about. And over time, I learned that equity multiple is very beautiful and it draws people in. But unless the operating team can make the other stuff work, that equity multiple is pretty meaningless. Yeah. And so that is what initially drew me in, was the idea of I can put money in and it'll be worth twice as much in 5 years. Heck yeah. So that was my initial draw. Yeah. My husband is a numbers guy. And so I'm sure that his was numbers and all sorts of other stuff. Mine was just, there's no other way that I know of that you can double up in that short of a period of time. And so that's really what sucked me in. The number of doors, all that stuff, those things are kind of arbitrary to me.
Yeah, especially for passive investing or even active investors. I think as investors you care about the returns. That's what you really focus on. You can be making the same amount on a 20-unit deal versus a 200-unit deal.
Well, and I think about our single family homes. It's like, no, we're not making a ton on them, but they're doing really well. And when we look at the equity piece of it, it's increasing our money too. And then the houses are in appreciable areas. So 3 out of 5 are appreciating each and every year. Yeah. And so there's a lot going on with those. So I'm not going to say that multifamily is the only way to go. I'm not going to tell people sell all your single families and go straight to multifamily, because if you're in a situation like us, you can't beat infinite returns. I don't care what asset class you're looking at. You can't beat infinite returns.
Yeah,
And
exactly.
so it's kind of like, I'm just never going to tell somebody, oh, you need to go all this way or all that way, or because
Yeah,
you can find
that's good.
success in so many different ways.
Yeah, I love that. Let's talk about your multiple businesses and how you get them all started. What is the first business that you have started? Is it the podcast or is it, you know, other ventures?
Actually, the first thing we ever did was a 3-day virtual summit.
Mhm. That's crazy because usually people have like podcasts or lead gen blogs and etc. to start with before they start having a conference. So
Yeah, no.
how did that go? Like what lesson do you listen from there? And basically like how did you actually drum up a whole conference just kind of out of the blue? Yeah.
So my last day actively teaching was December 3rd, 2019.
Hmm.
And after a little bit of a recovery period, my husband and I started talking. It was like, well, what am I good at that can eventually generate some level of cash flow?
Hmm.
Well, I can talk. I can talk. I can talk really well. I can remember like things about people. I
Hmm.
can remember a lot of what I see. It was like, what are the things that I can use? Right.
Yeah.
And so we were like, okay, well then what about if we do a 1-day event? Or a few hour event. So I kind of started putting feelers out there and asking around and what do y'all think about, a 2-hour event or a 1-hour event or a 1-day?
Hmm.
And it ultimately led back to Dan Hanford.
Hmm.
And we know Dan and his wife, but this was really before we got too far in with them. And I was sitting in my doctor's office getting my FMLA paperwork filled out,
Yeah.
and my phone rings. And I look down and I'm like, Dan, he must be butt dialing me. So I didn't worry about it because it hung up pretty quick. And then another call, and I'm like, what the heck? Because we were supposed to talk that afternoon because I'd scheduled an appointment.
Yeah.
And so I pick up the phone. I'm like, hello? He's like, hey, Angel. And I'm like, we're supposed to talk this afternoon. He's like, yeah, but I had time to do it right now. So let's just do it right now. It's
Yeah.
like, okay. So I'm like rifling through my backpack, looking for a piece of paper, and I'm taking notes like a crazy person.
Yeah.
Now, the cool thing about that was 24 hours before,
Yeah.
I had started looking for speakers,
Yeah.
and I already had 14 yeses.
Nice.
And so I started asking, like, what's the difference between a 1-day, a 2-day, and a 3-day event? And he
Yeah.
was like, it's just coordinating people.
Yeah.
I was like, I can coordinate people.
Yeah.
It's not just coordinating people.
Yes. There's a lot more.
But
Yeah.
it's we still did it. Definite lessons learned.
Hmm. What?
Number one was that we knew we needed help on the digital side, so we did hire someone,
Hmm.
him and his team, to come in, and they ran basically the whole digital side.
Hmm.
So I did the Zoom.
Hmm.
My husband did like the wing phone calls. Hey, you're on in 15. You're on. Where are you?
Yeah.
He was that guy, and I took care of the Zoom.
Yeah.
And so, and someone else took care of my Facebook ads and running my email drip and all of that stuff,
Hmm.
because I know that's not my thing.
Yeah.
And
That's
so
so
we
cool.
hired someone else to do all of that.
Hmm.
Then COVID hit,
Hmm.
and we wound up offering the very first summit free,
Nice.
or free access. We did free live access to that very first one.
Yeah.
And we had 375 sign up attendees,
Nice.
which was awesome for who is this person coming out of nowhere, with a 3-day summit, and all of my
Yeah.
speakers were female.
Nice.
Because, and I didn't promote it that way.
Yeah.
That was something that was on my heart that I wanted to do.
Yeah. You
And
should probably
so
promote it.
we're having our fourth,
Yeah.
yeah, we're having our fourth summit in September.
Mhm.
And still, one of my main goals when I am asking people to speak is to make sure that I have men and women, and I have, people of all ethnicities represented, because as a female, it's hard sometimes,
Mhm.
because maybe we're not taken as seriously, or maybe there's just not as many of us, or, whatever kind of things there are. But I want to show that it doesn't matter what color of the rainbow you are. It doesn't matter what you pack in your pants.
Yeah.
We're all amazing in real estate. And so I try to showcase that diversity every single time I have a summit, because eventually I want people not to see me as a female doing amazing things in real estate, but
Yeah.
as a person doing amazing things in real
Yeah,
estate.
I love that because equality is not just kind of single out a single race and you know, and gender, but it's kind of like acknowledging who you are as you are. And some of us feel we shouldn't be pre-labeled with our gender or race, and just you know we're just awesome business people.
Yeah.
Yes, that's awesome. Well, I'm really glad that you said that and you had to set the stage for this kind of in essence a very much a equality a platform essentially for promoting that equality. So I think it's people like you that kind of make a really a difference in the community here. Yes, thank you.
Thank you.
Yeah. So okay, so that's great. So like the first conference it went, it was all free, but I'm guessing there's some sort of promotion. There has to be a paid element at some point. And then so usually people talk about in business, how do you profit? So how do you profit from that? What is the catch when people say it's free? What do you think like kind of that business taught you and then paved the way for your future businesses?
So we still don't make a bunch of money in it because we still do live access for free because it's that teacher heart of mine.
Yeah.
My goal is to share information and teach others. It's
Hmm.
not to hoard information or charge for what I've got.
Hmm.
There are some things that require more specialized skill sets.
Hmm.
So like with my husband's underwriting, that stuff takes him a lot of time.
Yeah.
So yeah, he's going to charge for that. If we're going to do some kind of a workshop or boot camp where we walk you through how to become an underwriter and how to develop your own spreadsheets,
Hmm.
we're probably going to charge for that because that's a specialized set of skills that not everybody has.
Right.
And my husband's worked really hard for that.
Hmm.
So those things are a little bit different.
Hmm.
Those things are going to cost some money. If you come to me and you say, "Hey, I want to do a 2-day virtual summit.
Hmm.
Can you help me out?" And I'll be like, "Sure." You figure out who you want your speakers to be and I'll take care of everything else.
Yeah. That's amazing.
And I will get the team together. We will take care of your needs.
Hmm.
And it helps you get out there
Yeah.
without having to do all the background work because it is crazy.
Oh yeah.
Once you've done it a few times,
Yeah.
it becomes way less intimidating
Yeah.
and your comfort zone catches up crazy fast.
Hmm. Love
Because
that. Yeah.
coming out of nowhere and doing a 3-day summit,
Yeah.
that was intimidating.
Yeah.
But
And
now that
having a
I've
good
done it,
audience engage in
yeah,
everything.
I can't imagine not doing it now.
Yeah.
And so, special thank yous to Dan for making me believe that it was not that difficult to do, because if you had told me how hard it was, I would have never done it.
Yeah.
So whether you did that purposefully or just by absolute chance, it worked out. So the universe was working for me that day.
That's awesome.
And it just worked out. And then during that first conference, I said, "Hey, starting up with weekly episodes,
Hmm.
in 6 weeks or 4 weeks or whatever I said." I actually missed it by one day
Nice.
because our very first episode happened May 1st
I see.
and it was supposed to happen April 30th. So
Yeah.
we missed it by one day.
Oh no, you're under
But
deliver.
we've been doing episodes every week since May 1st. And the podcast is 3 times a week. The same production company that helps me with my summits also helps me with all of my podcasts and YouTube stuff. So when we're in hot and heavy with the summits, the podcast usually wind up with a little break because it's an overload and I have a tendency to procrastinate. So as the summit gets closer and closer, I'm recording. Well, see, before this last one, I recorded, what did I record? It was like 19 or 22 hours in a week and a half.
Wow.
That had to go on my summit site. Yeah.
Yeah, that's a lot of recording.
My production team was like, "Angel, stop. You've got to stop. You've got to stop." I'm like, "But I can't stop. I need these people."
That's awesome. So that's awesome. So you from that whole experience, you spawned out two more businesses. One, obviously, the underwriting, which kind of leads to that, which is beautiful because it's parallel business. And then also the helping others to kind of host their event because now you're using your experience in doing that. Is that all the business you have? Like, what else do you have over there? And then would you say there's certain business that you have started and folded? So what are these decisions that you made you, or maybe there's an idea that you just kind of killed it before it even went? So what is your thought process on, because as entrepreneurs, a lot of times we're kind of lacking the focus, but it's important to highlight parallel businesses are great. Business that kind of distract is not so great. But like, is there ideas that you thought about starting, but then you kind of folded pretty quickly or
So
deprioritize? Hmm.
yes, there are. Uh, so I have a friend that has a housekeeping services business.
Hmm.
He's got Dallas maids, and then I think he also has Memphis maids still.
Hmm.
And I believe he's the number one housekeeping service provider in Dallas, but I could be wrong.
Yeah.
Um, but he got me thinking, and we're good friends. We went to school together. And he got me thinking that would be a really smart thing to start here where I am.
Hmm.
And so I was like, Jason, I think we need to look at doing this. And
Yeah.
he's like, can we make money on something first?
Yeah.
Because I'm really bad about, I see big picture
Yeah.
and I don't see all the things that it takes to get you to that final destination. I
Hmm.
just see big picture and I'm like, ooh, we could have a cleaning company. And it honestly, it goes in parallel with it too, because you need a cleaning company when you're turning units
Hmm.
on your make readies. You need a company that can come in and take care of that. So what better company to have than the one that you own?
Yeah.
Um, so that was my thought process, but I skipped over that
Yeah.
when I was talking about it. And my
Yeah.
husband was like, you know what? I think that's a great thing to start once we have some properties here locally
Yeah.
that we would use our company for.
Hmm.
It was like, until then, it's on hold.
Yeah.
So that was one I thought of that like he pushed to the side. It's
Yeah.
not going away. It was
Right.
just pushed to the side for a
Right.
little bit.
It's
It's still going to
prioritizing.
happen because I've already found my manager. I've, I've already found people.
So Jason, you listen. It's call me back.
Yeah, he's like, can we just make something else? Let's set with one,
Yeah.
make one successful, and then we'll move forward.
Yeah. I think that's very important as an entrepreneur to be able to have the yin and yang, which is focusing and the larger picture, be kind of agile on the move, be able to recognize the chances and then kind of move forward. That's awesome, Angel. And then we're kind of coming up to the bottom of the hours here on our show. And then you mentioned that you have kids, so or kid. And so how 4 kids? So that's crazy again. I have two, and they keep me hands full. So basically, how are you helping your kids? First of all, how do you actually strike a work-life balance? Being a busy working mom, and I'm assuming that you probably also do majority of the domestic chores. How do you actually kind of take care of work-life balance?
So number one, there is no such thing as a work-life balance. There's just not.
Yeah.
Um, and number two, don't be afraid to ask for help. When I talk about having a cleaning company,
Yeah.
a lot of what we do is it starts out selfish.
Mhm.
Why would I be thinking about having a cleaning company? Because I use someone to help me clean my house. And if I need it, I'm not so out there outrageous that I'm the only person in the world that needs someone like that.
Mhm.
There's a lot of people out there like me.
Mhm.
And so like my friend went from a $0 business to $1 million business with what he's got.
Yeah.
And so that tells me the demand is there.
Right.
And so I already know that I use somebody.
Yeah.
And so I just kind of put that out there. Don't be afraid to say you can't do it all, because we can't do it all.
Yeah.
We have nannies that help us.
Mhm.
And we have a rotating schedule. And you might be like, well, why do you rotate out? Well, we have a special needs son.
Oh, wow.
And so because of the burnout rate,
Mhm.
we do a lot of rotation so
Mhm.
that our nannies aren't working, 40 hours a week
Mhm.
and having to help take care of our son, because it's hard.
Mhm.
So yes, we might have a girl that gets 40, and then
Mhm.
we have other girls that get between 15 and 20 apiece.
Yeah.
And that sounds like a lot, but with 4 kids, one of whom is special needs, things get a little crazy. And we
Yeah.
have a newly hatched teenager, which that's crazy. That's a whole different level of crazy.
Yeah.
We'll get there with her. We love her.
Yeah.
And we try really hard to remember what it was like when she was young and loved us.
Yeah.
But it's just, it requires a lot of hands-on care. And we do have special things that we do with the kids. We go to the park. We'll watch movies as a family. We'll have popcorn. We do all of those things.
Mm-hmm.
But it was coming to the realization that one, there is no work-life balance.
Mm-hmm.
And you just have to say, I'm shutting it off now.
Yeah, which is a balance
And
by itself, because balance is kind of like what's maintained in your mindset, etc.
yeah. Well,
Um,
and there's a lot of people that'll say, don't take off on the weekends.
yeah,
I take off on the weekends.
yeah,
I still post, I still do a few things here and there, but
yeah,
for the most part, the weekends they're my chill time.
yeah, definitely. And so what are you doing right now to kind of set your children up for future financial success and literacy?
So this one's kind of, so you set your why, right?
Mm-hmm.
Well, our big why is that we want to have and create a nonprofit foundation that the foundation, there's an endowment within the foundation that donates minimum $100,000 a year to the one group that researches and educates about what our son has, because he's got a really rare genetic condition.
Mm-hmm.
When he was first diagnosed, there were 742 cases in the world.
Wow.
Yeah. So, and there's some that are more rare than that, but it was pretty rare. Now I think they're saying it's somewhere between 1,400 and 2,000 in the world. They're saying it's the second leading genetic cause for autism.
Mm-hmm.
And this more and more research is being done to show that it's looking like, at least in my mind, that there's a genetic basis for most forms of autism. And so I feel like there's going to be more genetic testing done as we progress over time. But we want to have the foundation there that will help other parents who get the diagnosis we got, so that it's not a moment where like the earth crumbles out from under you.
Yeah.
Because there were so many what ifs and there were no answers. Right. Because even our geneticist was like, I would introduce you to this other family, but their son and their child and your child have the same disorder, but your child seems to be doing so much better.
Yeah.
And so we didn't even get an intro there because she didn't want to upset any kind of a balance.
Yeah.
And so we want to help families when they get that diagnosis, that they don't feel alone and they don't feel, I mean, it's already hard and you're going to grieve the child you thought you had because and it's weird because you're grieving for the child you thought you had, yet you still have a child that is alive and with you.
Yeah.
And so it's weird and people don't know how to explain it to you, and you just go through it and you form your new normal. And it's one of those things that it's really tough to maneuver through on your own, but there's no other choices.
Right.
And, I don't think that I would have gotten to the point where I am had it not been for Jason, because, one of the things that Jason said very early on, I was very upset, and I don't remember how old Anson was. We're the end of the Williams, and at least this line. And I was upset because I was like, there's not going to be anybody to carry the name. And the first thing he said was, what if it wasn't Anson that was given to us, but us that were given to Anson? And that flip changed things for me because, I mean, I'm already kind of can't say it on air, starts with a B, rhymes with witch. I can already kind of be there. But it kind of gave me a license to pull that card when I need to. So I'm a really strong advocate for my son. What that also means is that our three daughters have to have that same level of independence and tenacity and witchiness to be ready to deal with the stuff that comes along with Anson when Jason and I are no longer alive.
Right.
So raising independent females is like, when I say our newly hatched 13-year-old, it's not just that she's a teenager. It's that we've raised an independent woman.
Yeah. It's a mix of all.
And it's hard. She is Angel 2.0.
Yeah.
And then my next one is Angel 3.0. And that last one is Angel 4.0, like beyond a shadow of a doubt. Yeah. I've created my own worst enemies, right? Not really worst enemies, but definitely
yes.
Yeah, but it's they're definitely going to be independent enough to be able to tackle any kind of advocacy that needs to be done for Anson. And then it also kind of begged the question, like what Jason said, he was like, and besides that, as independent as our girls are going to be, their husbands are probably going to take their last name.
Yeah. Exactly. There you go. And in the Asian country, we do not take other people's last name. So that's just how it goes. And then you can name your kids any name you want in America. So Um, so it doesn't have to take the traditional. Yeah, I love what Jason said. That it could be
Yeah,
more.
and honestly, just so much has changed. And so, whereas I was raised by my grandparents very traditionally with the last name,
Mhm.
that's just not it's not so much the case anymore. And so there's a lot more freedom with that. And so it doesn't have to be the end of our name.
Right.
And so I was kind of short-sighted to view it that way. And so it was really cool that Jason is not as short-sighted as I am in some things. So
That's awesome. And I would say, you know, there used to be a saying, behind every successful woman, there's a working husband, or behind every success man, I guess the other way around. Because every success man, there's a, you know, hardworking woman, but in this case, behind every successful woman, there's a hardworking man. I love it, our episode, and we definitely would love to kind of have you back on our other show, which is still in progress on planning. And Angel, like, thank you so much today for bringing your personality, and kind of your knowledge on what is it to be as a diverse investor and as a serial entrepreneur, and just kind of rolling up the sleeve and get the stuff done. I think our viewer can learn a lot from you, from a quick starter and how to kind of find your ways to become successful. Doesn't matter where you start. Yes. Thank you so much for.
well, your current situation never has to be your final destination.
Yeah, yeah, absolutely. And how does people check out your show? How does people kind of check out, you know, podcast? I forgot to mention about that. Where do people kind of contact you, and also participate in your conferences, hopefully free in the future as well.
Absolutely. Just go to www.theacademypresents.com. There's a tab there for joining as a member on our site. There are workshops, there are boot camps. We've also got a live course that we have. It's a low cost monthly subscription course where we Zoom once a week and we basically teach you how to copy what we did.
Nice.
And yes, it's a little bit different given the current economic climate, but you can still use a lot of it. And we've had to alter what we do ourselves as the economy has changed. So we can share some of those changes and how we are still able to make it move. And your finances don't matter nearly as much as you think they do.
Mhm.
And I think coming to that realization makes things like all of a sudden you start thinking bigger because you're no longer driven by the dollar signs.
Mhm.
You're not restricted by the dollar signs.
Mhm.
You see the big picture and you just start to go after it. And that's been one of the coolest things of being in this space is I can tell people about my wild and crazy ideas and they're like, heck yeah, that's awesome. Do it, do it, do it. They're
Yeah,
not like, oh, that.
yeah,
It's a completely different group of people, completely
yeah.
different mindset.
Yeah, surround yourself with the right network. That's awesome. Well, thank you so much for your time, Angel, today. This wraps up our another episode, 10,000 Roads to Financial Independence. So we're going to put all the resources down in the resource notes. And we'll see you next time.
Bye.
Okay.